one of the points that was made now that, there's a lot of conflicts in the world, and that's kind of helping shipping to do well. And, there was a ship owner was asked, what keeps you awake at night? And what he said was, world peace and geopolitical stability. And it's a bit ironic that, unfortunately, those are the things that, keep shipping strong. We now have a panel. The title is the current market as good as it gets? I mean, everything seems to be in good order, in a good position. So we're going to discuss, is it, in fact, as good as it gets? Our moderator is Resianna Zachou, who's Director of the Shipping Industry Center of Excellence with PwC. Resianna, please.
Thank you, Kevin. Thank you so much for joining us today. As Kevin already said, the topic is the current market as good as it gets? So I guess we're going to predict the future. We are not magicians, so don't expect any flying hats around here, but our speakers are going to try their best in order to give their hints about the future. And we cannot have a future if we don't talk about the past. So we're going to get started with the first question, which is if you can describe your company's performance over the last 12 to 18 months. Jerry, do you want to get started?
Good morning. Good morning, everyone, and thank you for having us. The last 12 months for us can, I think, all be described as an extreme makeover at Capital Clean Energy Carriers. I mean, just the name change from Capital Product Partners implies that quite a bit has been happening. 12 months ago, we were a company with 15 container carriers and 7 LNG carriers and the market cap of 300 million. Today, we have 12 LNG ships in the water, another 6 to come, which will make us the largest listed LNG owner. In addition to that, we have LPG and liquid CO2 vessels on order. Our market cap has increased to 1.1 billion, and year to date, the return for our shareholders has been in excess of 35%. So I think that speaks for itself. We have been changing quite a bit the mix of our fleet and the direction, and shows also in what we believe going forward.
Awesome. Thank you. Achilleas?
I think the market for the LNG has been quite strong. So we took advantage of this to work on our capital structure, basically. Also to fix the vessels for longer and reduce the volatility of the cash flows generation. We managed to refinance all of our facilities that they were maturing the next years, which we believe it has been very important for the stability of the balance sheet. And then we try to take advantage of the strong market to reduce the residual value risk on the older tonnage and the smaller sizes vessels in order to have the ideal fleet in the next couple of years that we would like to have. So I would say that it was more of an internal work of preparation on getting ready for the next round of the LNG growth.
Great, thank you.
Hello, everybody. As you probably know, we're active with 2 public companies, a container company and a dry bulk company, so I'll talk very briefly about each. The last 12, 18 months, we've done extremely well on the container ship sector, as you know. The Houthi attacks and the closure of the Red Sea have really helped the container market. We've proceeded implementing the plan that we started a couple of years ago when we put some orders for new building feeder container vessels. So we've taken delivery during the last 12 months, 18 months, of 7 new container ships, and we still have 2 to go in January. So we've been modernizing the fleet. We thought that we would be scrapping our elder vessels but the market has been very good for us, and we continue to be rechartering them time and time again and for good periods. So a very nice story at this point for the container sector, and we're talking about the past here. On the dry bulk sector and the present. On the dry bulk sector, again, we, amongst most Greek owners, felt and feel that we need to go for younger, more modern vessels that are less fuel consuming and adapt better to the environment. So we took last year 4 new Ultramaxes, growing the fleet, again planning to sell our elder vessels when the markets are not good enough. But the markets have been good. They have not been bad. We've been making good profits, not as good as in the tanker and the container sector, but very satisfactory returns up to now. We're a bit disappointed now that the market is not picking up in the fourth quarter, but let's see what happens.
Nice. And George?
Thank you very much for having us. Lodline Marine is a private company established 50 years ago in the dry bulk sector, mainly in the handy and the supras and ultras. Over the last 18 months, we have seen the market being weak in Q1 and Q3 2023, but other than that, at comfortable levels in the mid-teens. As Aristides just mentioned, we would have thought that the market would be picking up by now. Maybe it's going to do that. Probably it's going to do that. Other than that, we have been able to sell and buy some tonnage, renewing our fleet, and getting ready for hopefully better days ahead. Thank you.
Great, thank you. Aristides, you already have, I think, put a touch on all these geopolitical events that are going on right now. So we have all these conflicts, Ukraine, Russia, we have the Middle East, we have also the China-Taiwan, the upcoming US elections, the Houthi attacks that you already mentioned. I just want to ask how these geopolitical events impacting your business and how you are getting yourself prepared.
Yes, it appears that we have extreme geopolitical events happening, and things like the environmental crisis affecting the world. This has always been the case. There's been always issues, but we tend to forget about them when they pass. So, and they do really determine, let's say, the global markets. What we in shipping are concerned on is the global growth and the globalization effects, and if that's happening and how fast it's happening. So these are huge risks. Anything can happen. I really don't want to make any prediction about the future. I just know that in shipping, you have to be around, and the markets will reward you when you least expect it. So we are there, and we will continue to be there. But we all have to be cautious and not overstretch ourselves, because things can get worse. They can get even much worse. So I think the primary thing that all of us should be concerned with is, being conservative, not overly ambitious. We don't need huge leverage in our businesses. They are so risky by themselves. We don't need to be adding more risk. Let's see what happens.
Nice. What about the other ones? Do you guys feel the same way?
Well, overall, the idea is that indeed geopolitical events typically, when they create inefficiencies, they favor shipping. But we have seen, of course, as of late, politics come into the business of, for example, LNG supply, right? We have seen in this pre-electoral cycle, the Biden administration slowed down export licensing for certain projects that will affect the demand for shipping, at least in the short term. So I think where I fully agree with Aristides is that while the common wisdom is that, yes, geopolitical events typically would be favorable, and we have seen them come with more frequency and higher density, overall, it doesn't always work that way, and the only way to be able to prepare for those type of events will be to have a strong balance, its contracted cash flows, and make sure that you can weather the storm.
Nice.
Just to add that, I mean, of course, I agree. The thing here is that there are many tension points that they seem to keep on escalating. It's difficult or impossible to predict the future. The question is, what are the things that you control and the things that you don't control? And for those that you control, to do the best you can. And this is, as it was said, your balance sheet, your financings, your cost structure, your efficiency, and all that stuff. If you are doing these things right, then the increased risks probably will create the right opportunities, and we will be able to take advantage.
Do you want to add something?
We are seeing some major geopolitical effects making dramatic changes to our industry. We have seen a reduction of the flow of vessels through the Suez Canal as a result of the attacks on ships by Houthis, who have seen a reduction of about 61% at present. So this is increasing the ton miles that the ships have to go in order to perform the transportation of goods. In our sector, in the geared dry bulk sector, we're seeing an increased 5.5% in ton miles. At the same time, due to the emission regulations and the reduction of the available horsepower on ships, we are seeing that the average speed of bulk carriers in those two sectors has fallen in both cases. Furthermore, we're looking at the Panama Canal, and we're seeing that there is normalization in that respect. We're looking at the Chinese stimulus that now it has recently been announced of about $300+ billion to stimulate consumer spending and growth. And I think that this is going to bring some positive news for our industry, especially for the dry bulk sector that we are looking at. We are looking at the increasing tension between the Chinese and Taiwanese, between China and Taiwan. And we're very concerned how this is going to develop over the years. This could be an atom bomb of geopolitical issues if China decides to take this one step further. And there are many other parameters that are affecting our business. I'll just name a few. Thank you.
Perfect. Thank you, George. So now moving on to the next question and going to talk about the future, the next 2 and 3 years. What are the main risks, challenges that you see for your business in order either to grow or sustain your financial performance? George, do you want to kick off that discussion?
I normally say that our business depends on 10 parameters. You have a pretty good idea about one of them. You have a mediocre idea about the second one. You have just a hunch about our gut feeling about the third one. And as far the fourth to the 10th, you have absolutely no idea how things are going to develop. Absolutely no idea. In order to be able to be safe and to be able to endure those this changing environment, you have to keep your bottom line at the best possible level. You have to keep your operating expenses and your interest costs and everything at the best possible level in order to have the safest bottom line. Nobody that enters shipping thinks that it's going to be a steady line, it's going to be something which is 100% predictable. We're living in an unpredictable world. We're affected by all the geopolitical factors, so we have to do one thing right. You have to keep our bottom line at the best possible level. Thank you.
Okay. Thank you for the insight. Anything else that you guys want to add?
I just want to say that the biggest risk I think that shipping can face is deglobalization. Because if the geopolitical situation is such and we have a war between China and the US, a Cold War, and everybody starts producing in his own country, well, that's not very good for shipping. So this is the biggest risk. It can happen through many, many ways, and it cannot happen. I'm an optimist generally, believing that the economy is what drives the world, and it's definitely an economical advantage for the whole planet to interact with each other. So I'm cautiously optimistic.
Nice. Jerry and Achilleas, anything from your side?
I think the other thing is the regulatory environment that is getting more and more complicated and unclear. So we try to take long-term decisions that investing in assets that they will be around, hopefully for many years to come. But the regulatory environment is not stable, and the environmental rules may affect the useful economic life of the assets. So that's a big challenge. I mean, when we have been building our LNGs in the past, we were always calculating 35 years of useful economic life. Today, 35 years sounds a lot on an elevated asset value price to build it. So it's a much more risky investment in a more expensive financing environment.
Thank you. And Jerry?
I agree with all the issues that my fellow panelists have highlighted. If I had to add another one, I would probably steal from the Allied presentation. An abrupt unwinding of certain geopolitical factors in play, such as the closing of the Suez Canal, the Russia-Ukraine conflict. So a sudden solution being found for all these issues would probably lead to, at least in the short term, to less demand for certain segments. So I would flag that one as well if I had to choose a more short-term factor.
Nice, thank you. And now I have a tricky question, and if, Jerry, you want to kick that discussion. The question is that if you have to invest in a different market segment than the one that you are currently invested in, which one that will be and why?
So for us, it's relatively easy because, as I said earlier on, we have been changing the mix of our fleet by quite a bit over the last year or so. So we started with 15 containers. Now we have, a year ago, now we have 3. We have raised more than 400 million in net proceeds, and we have redeployed that capital, or we are in the process of redeploying that capital into additional LNG carriers, but also LPG medium gas carriers, as well as liquid CO2 carriers. The concept behind that is effectively going long on the LPG ammonia business, which is a traditional business, but also with an option to be a tonnage provider in the emerging cargoes that energy transition is bringing. What do I mean by that? So as we see an increased trade for low-carbon ammonia, we expect that to start being transported mostly on MGCs and much later on very large ammonia carriers, VLACs, because currently the infrastructure for loading and discharging ammonia is not there for very large ships. So our MGCs can be part of that trade, which we expect to emerge over the next 5 to 10 years. Our liquid CO2 carriers, again, these are handy LPG carriers. They can carry LPG, they can carry ammonia, but they can also carry liquid CO2. This is also a significant market that is taking off. We see a number of projects, both in Europe as well as in the Asia-Pacific, that will lead to increased demand for this type of ships. But in the meantime, this is really an option. So we have ships that can do both the traditional hydrocarbons and be there for the energy transition as it comes. So as far as we are concerned, I think it's clear that we have chosen the gas side of the shipping business, but also with an eye towards energy transition.
Great. Achilleas?
Well, that's easy for us too, I guess. So we will stick with LNG, keeping an eye on the new technologies without being in a rush. So we have built an operational platform that is very strong, and this platform can bring more in the future, irrespective of the fuel.
Great. Aristides?
Well, I wouldn't, under any circumstances, invest in any other shipping sector than the two sectors that we are in. And that's not because I think that these are the two best sectors, but it's because I don't know about the others. And I don't want and like investing in things that I don't know. If I had to do something, I think that I would invest in new technologies and AI and stuff like that. But we continue to focus on container shipping and dry bulk shipping. And if you're good at what you do and you know your market, I think that's the best place to stay.
We feel confident in the sector we're in. We have no plans to make any changes. I concur with Aristides. I'd rather do the things that I know and leave something for other people to do.
Okay, great. That's the honest answers. Okay, moving on to the next question. That's a big question for you, Achilleas, to kick off the discussion. And the big question is, if someone asks you what is the best shipping advice, for strategy for the year ahead, including any environmental restrictions that we are currently seeing, what advice will give? Will be more like investing in new ships versus second hands, trying to focus on current operation and manage cost, nurture existing relationship, be flexible and explore opportunity? What advice will give to someone that asks you that question?
Well, I'll talk like a boring financial, like a CFO. So the most important is to invest at the right CapEx, I would say, because this will define your balance sheet and what risks you will put on your balance sheet, your flexibility. So your capital structure needs to tie your strategy, and you need to have the ability to structure your future strategy in line with your capital structure. And we have done it in GasLog, being able to access different sources of capital, private money, public money, bond markets, equity markets. We have done our refinancings, reducing our risks in the softer market that we expect. So if I wanted to put a quote, is that basically you take the money when they are available and not when you need them.
Great. And I know, George, you had an interesting perspective on the future of ships. So do you want to share that with us?
We are looking at the new alternative fuels. And at the moment, I cannot really say that I can see one clear path ahead. We are very hesitant to place new building orders with new technologies because we don't really see clearly the fuel of the future. We have seen many alternatives, but none of them we don't feel that strongly that it is going to be one that's going to prevail. We focus on ships that are energy efficient, and this is the number one strategy at the moment. We think that the energy efficient ship in either a new building or on the second-hand market has got a lot of value. As far as the new technologies are concerned, we have seen a U-turn by Maersk recently on methanol. I do not know if all companies could do this type of U-turn and could have the ability to endure it. Having said that, we are still very, very focused on these new technological issues, and we want to make sure that we make the best bets in the future.
Thank you. Jerry, Aristides, anything to add?
I think we have had this discussion again and again, and the conclusion is that ship owners should not be asked to take that responsibility and risk on their own. This is a wider industry issue and affects charterers, shipyards, engine manufacturers, fuel providers, and so on and so forth. I don't see why this should be just laid at the doorstep of ship owners and then everybody turn their back. So market-based measures like EU ETS, Fuel EU, that give clear returns and incentives for reducing carbon emissions, for using alternative fuels. This give also the incentive to stakeholders to proceed with new vessel designs and propulsion and alternative fuels. For example, the wider group capital has gone ahead and ordered a number of dual-fueled LNG tankers. And the reason behind it is that if you extrapolate the potential savings, not just by the use of LNG as fuel because of the higher energy density, but also because of Fuel EU and EU ETS, you can have tangible returns on that at incremental capex investment, right? And I think this is the way it goes. This is not, nobody has the crystal ball and should not be asked to take risks without having a proper return.
Thank you. Aristides.
Yes, I think that most companies, unless they are one of the huge ones like Maersk and other big operators who can afford to take risks that may or may not bear out, most traditional shipping companies are best advised to keep on running with their existing ships, having their operations as good as possible, using energy-saving devices which are here and produce immediate results, which are good both for the environment but also financially. Changes in the industry will be driven by regulation and are being driven by regulation, and the Fuel EU and the EU ETS and all that stuff are measures that force all of us to take actions, and I think this is what will continue to be the situation. It's very difficult to predict now, or for a ship owner to take the risk on his own to embark on some of the new technologies. Even the dual engines, and you know, something dual is not more efficient neither on one side or on the other side, but it just serves as something to hedge against any outcome. And this is what some people are doing. I believe that in the distant future, we will have some kind of technology that will prevail. But for now being, there is a lot of different technologies and fuels that are being considered, but it's a big gamble to bet on one of them.
Awesome. Do you want also to kick off the next question, Aristides, which is what are it is in your agenda focus areas for the upcoming years? It's more digitalization, decarbonization, AI?
Yes, as I said previously, run your operations as efficiently as possible. This involves using new technology that exists and is applicable today, digitalization, optimization of routing, energy-saving devices, changing your propellers, changing your bulbous bow, using specific paints, using AMPs so that in port you don't consume, you don't use your diesel generators. All these measures are important measures that one has to take because they have a positive effect both for the environment and for the company that is taking them. So that's the issue that you have to look at on the operational side, and we will be looking at during the coming year. Then, of course, you have some strategic issues that you have to consider. And for companies like us that are public, that are growing, that we want to be here tomorrow, we do have to consider replacing older vessels with younger vessels, and this is a strategy that we will be doing. And again, I'll mention by always being prudent on our financing so that we have a strong balance sheet.
Nice. Achilleas, do you want something to add?
Yeah, I mean, just to repeat probably what it was said, that quality data and the ability to use this data on your day-to-day management can make a huge difference because there's a lot of data from the vessels, from the operations in the office, in the systems. You need to connect them in order to extract all this data that eventually can help you on the decision-making on your day-to-day management. This is quite important. I just wanted to add something else, though, that the regulatory environment is changing in other areas as well. For example, the tax environment is changing significantly. We have economic substance rules. We have a minimum global tax. And the typical traditional offshore shipping structure, it requires some more careful thinking, and it's not something that you can left it behind, and it's not untouched. That's what we see also growing.
I think I see the former auditor talking right now. George and Jerry, from your side.
We are seeing all these challenges ahead of us. I would like to add, as far as the new alternative fuels are concerned, that everybody should not be misguided by the approach tank to wake, but rather to the well-to-wake approach, which refers to how the fuel is being produced and consumed on board and the result that you are taking. And this is something that every decision maker that decides to make a new acquisition or to place a new building should keep it in mind. Unless you do that, I think that is very dangerous, and you could be at a very expensive paths, very significant mistakes. We think that the best way to run the company is to use the best information technology which is available, connecting the ships directly with the office, and making sure that all performance and consumption data and all other characteristics are being transmitted to the office and being further analyzed in order to enhance the vessel's performance. We have done this over the last few years with great success, and I think we have improved our operational profile in terms of consumption, in terms of breakdowns and stoppages. So in that respect, it has been of great significance and great value to us.
Thank you. Jarek?
Overall, I fully agree with my fellow panelists. Maybe what I would highlight is that, as aforesaid, there is plenty of room for digitalization in the shipping business. Compared to other industries, we are quite a bit behind, both in terms of processes, data analytics. AI, of course, can be a tool in the digitalization process. But I think there's quite a bit of way to go for the shipping industry to catch up. There is, I think often we mention AI, and the idea is that the mind goes automatically to autonomous ships. I think we have quite some way to go. It's more important to make sure that we get the proper data, we use it, we combine data, and this is also something that we have been doing as part of an effort with other ship owners under the MERC, which is an initiative to decarbonize the industry. But in order to know what are the best tools, what are the best energy-saving devices that we just mentioned, right? How do we know which is more effective for the wider industry? You have to get those data sets, and in order to have proper data sets and good analysis, you have to have big data analytics. So I think also for the wider industry to be a little less fearful of sharing data and the results from their own initiatives, that could, I think, propel the industry forward. But as I said, there is quite a bit of way to go there.
Thank you. And before we close the session, maybe briefly, if you can state if you feel optimistic or pessimist about the prospect of the market for the next 1 to 2 years. Jared, you want to start?
I think by definition, any ship owner is an optimist, right? Otherwise, you wouldn't be long assets. You would be selling everything and off to your summer house. So yes, I mean, there will be. It's a volatile industry. We know how to navigate it. We know how to be prepared for it, as we discussed. A strong balance sheet, having cash flows in place to make sure that you can weather the storm. But overall, we think that fundamentals, especially for what we discussed before, LNG and the gas segments, are long-term quite robust.
Thank you.
Very optimistic. Our bankers are listening, so.
Perfect.
I'll be honest. I'm optimistic.
Nice.
I just want to say one thing. As George said, there is just one thing that you can really see in shipping, and that is the supply of vessels in the coming years. And it's not big. If you think about why we had that very bad decade that just passed between 2010 and 2020, and you look at the order books that we had before that, they were, in most segments, very close to 100% of the fleet. We had huge order books. Now we are complaining that the container ship fleet has a 20% or 22% order book, and that is huge. In other sectors, it's less, in dry bulk for sure, and in the small container vessels where we are active. So the one thing that we know is that we won't have too many ships delivering, and there are not too many shipyards to deliver ships, even if they were wanted. So the supply is under check. The demand, nobody knows.
Okay, what about you, George?
I agree and share the optimism of my fellow panelists. We wouldn't be here if we were not optimistic. I'm optimistic for specific reasons. As Aristides just mentioned, we're not really scared about the order book, especially in the dry bulk, handysize and supra range. We think that this is the order book is manageable. We also think that the older tonnage in the handy sector, we see that over 20 years old, it is about 36% of the existing tonnage. So we're not really worried about that. We are positive as we see that the Fed will continue decreasing the interest rates. And this is a two-way gain for us, because it reduces our bottom line, and also it enhances trade and enhances consumer spending. So this is good news for us. On the geopolitical side, as we discussed earlier, we're into the unknown, and it's very difficult to actually predict what's going to happen. But I agree with Aristides. During the 2010 to 2012, some 3,600 ships on the bulk sector were ordered. These were massive numbers. And these ships will start turning 15, 20 years old, and soon will be replaced by a newer tonnage.
Thank you. Unfortunately, our time is up. Thank you, everyone, for listening to us. We are happy to answer any questions, and we're happy to meet with you during the breaks as well. Thanks.
Thank you.
Thanks.